Hey traders, checking in on the stock market today. We had a bit of a rug pull in the tech sector after the slow and steady grind up every day. We dropped hard and fast. Let's look at the daily time frame and see if this dip is for buying.
Introducing the Chart Guy's Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So starting off with the S&P 500 here, this is SPY and an initial little lesson in perspective. You look at the hourly time frame and you say, oh man, complete collapse, we're dumping. And then you zoom out to the daily chart and that's it. So again, the daily chart, this does not matter at all on the size of this pullback right now. And as long as 359.17 holds, the daily uptrend remains. Bulls ideally want to keep the daily 12 period if they're going to remain their strongest. So that's what we're watching in the short term. Hourly time frame, got to oversold conditions. Hourly bounce into the close was fairly weak. It could be an hourly bear flag setting up for another leg down. And we know we need an hourly trend change back to the bulls if we're going to say that our new daily higher low has been set, which would look like a big enough bounce to create the space for the higher low and then changing that trend. So bulls have work to do to regain this hourly trend. But again, just want to highlight this was not a market-wide dump today. It was a tech sector dump. And if you look really closely, which we'll do right now, 15-minute time frame on QQQ, here's our dump from noon to 1:45 is when it was its ugliest, just in free fall. And you look at the healthcare sector, here's from noon to 1:45, not nearly the same. We did break the low of the day, no follow through, not the same kind of dump. We were not in free fall. The low of the day was holding for the vast majority of that pullback. And XLF is the same thing. Here is noon, and look at it going up for the first hour of that pullback. XLF was going up for an hour while QQQ was dumping. We did end up hitting a new low of the day by a penny, but again, we weren't in free fall. We were weak all morning. Then when QQQ went free fall, XLF went up. So we weren't having a scenario where all sectors were at the low of the day at the same time. We came close. I was watching for it all day. All of our sectors, our major sectors at the low at the same time, and there just kept being these little shifts which kept it from happening. So, SPY, we are scouting a daily higher low as long as that 359 level holds. Continuing to watch, this is day one of a pullback. It can definitely last more than one day. And tomorrow, that's what I'm going to be watching for very closely. Are the healthcare, financial, and tech sectors hitting the lows at the same time or not? And if the answer is not, then that means it's a dip for buying, in my opinion. IWM pullback from the all-time high, not even enough to start daily consolidation. Anything above 180.32 would be a higher low, but we held the low of yesterday. So again, that just shows us that the healthcare sector and the financial sector a bit stronger than the tech sector, as IWM has less exposure to the tech sector than SPY does. So here's QQQ. That's a big difference in how we pulled back. One red day on very notable bear volume, taking out 5-6 bull days in a row. And again, the video yesterday, go back and watch it. I cannot tell you when it's going to happen. I can tell you how it's going to happen. And I said the same thing this time around. Back here, I put out a video, I forget where, certainly not marking the top, but close to it, and saying these kinds of moves where we get bullish complacency end hard and fast. And this is definitely an example where this is day one. Could it do this? It's possible. Going to be watching for that potential. But I would still be calling anything above 294.78 a daily higher low. So bears will need follow through, and we'll need to see hourly lower highs and lower lows. This is an example where the bears punched the bulls in the mouth. They sucker punched them and surprised them. So now that the bulls are aware and ready, can we get follow through from the bears? Can we see confirmed hourly downtrends and follow through? That's what we're watching for tomorrow. Hardly got a bounce attempt going into the end of the day. When we do get follow through, we know we're just looking for an hourly lower high. Can we confirm an hourly downtrend, ensuring that the bears have follow through and control in their favor? Hourly RSI was pretty beat up, down into the teens, cooled off a little bit into the close. And we'll see what the overnight trading session does. Hard and fast drop. Complacency into hard and fast drop. Hopefully, if you've been watching these videos for at least 4 months, you're starting to recognize these patterns. Financial sector, XLF failed to break the 29.03 high. We pulled back a bit. It'll be notable to me if we break 28.51 support, because that'll be an inability to keep the daily EMA 12, which has been holding the last month plus. Keep in mind all of our laggard sectors, and I'm talking about the financial, the energy sector, the airliners. They've all been going up for 4 to 5 weeks in a row now. It's not going to be surprising at all that weekly consolidation takes place at any point from here because of how bullish we've been over the last month. So that's what we're watching for, a loss of the daily uptrend, and breaking 28.52 would be the first signs of cracks in the armor of the bulls, indicating the potential of a pullback. A weekly pullback. I don't really like that resistance line, but that support line worth paying attention to, but pretty much just watching the higher lows on the daily. Healthcare sector, gap up open, and the pullback did not break the low of yesterday. So again, we weren't in free fall. The broader market was not in free fall. The tech sector was in free fall. So when we lose the pattern of a higher low every day, and at this point in time, we've formed a higher low every day for the last 3, 6, 9 days. When that pattern breaks, we look for the daily higher low to form compared to 107.84. It's possible it's a weekly lower high shaping up for a tightening weekly range, but bears would have to pretty much show up for the next few days for that to be the case. Biotech sector, all-time high today. Bit of a notable bearish candle here as well, but again, anything above 130.84 is a daily higher low. Cooling off RSI levels, and everybody that pulled back today is just looking for hourly lower highs, XBI included, and a ton of individual names, just scouting those hourly lower highs on this next bounce. Daily uptrend remains. SMH, daily consolidation, decent bear volume, pretty solid pullback, still a daily uptrend, still daily EMA 12. So again, sucker punch from the bears, and now for the next couple days, now that the bulls are ready for it, do we see buying of the dip, or do we see confirmed hourly downtrends with bears keeping their control? Solar sector gave us the daily lower high that we were watching for, and we broke support on the same day of 79.67. We are now in a daily downtrend, which means zoom out. Weekly consolidation is underway, and we're looking for a weekly higher low compared to 64.48, but a notable shift in momentum on this daily time frame. And again, that's just one red day. Bears definitely want another red day tomorrow for follow through, and the volume is notable. And the VIX. So again, you look at how red we were today, I would have expected the VIX to be a little bit stronger, but reminder, the tech sector can be a bit misleading. I was just watching QQQ and individual names all day, and it's a bit misleading in the sense that the broader market was not that weak. So we did break a level of 2260, 2290 is a little double top. Didn't take out that level, and that's the highest level that we have seen in the last 2+ weeks. So certainly an important level in the short term. So is this dip for buying? The open tomorrow is going to be very telling. There was definitely bounces to be playing today, which I did play, and I'll go over at the end of this video. But as far as looking for daily higher lows, yes, it's at this point, unless we see tomorrow notable bear volume and all sectors going down at the same time, we are watching for daily higher lows to be set on this pullback. And it's the difference between aggressive and conservative. You have to answer that question for yourself. Let's just use SPY as an example. If SPY keeps dropping tomorrow, let's say we hourly bear flag and keep dropping tomorrow, an aggressive bull is scaling into this weakness and making entries based off of the 359 daily higher low. A patient bull is going to say, have at it, bears. I'm going to wait for the first significant hourly bounce that has me then anticipating the hourly higher low, so I have a nearby support level to play off of, and then I hope for the hourly trend change to indicate the daily higher low has been set. So question number one is always aggressive. Well, for what direction do you want to be looking? But then are you going to be aggressive or are you going to be conservative? Because that's going to determine when you are acting. If we gap down tomorrow and RSI levels are crushed, I'm going to be scouting a bounce. If we open higher, I'm going to be scouting hourly lower highs on these bounces. So I could be looking in the opposite direction depending on what the morning gives us, which is why I'm not going to do, I do these rundown videos and they help me keep a firm grasp on what's going on. And the more continuity you have in your brain of knowing what these charts are doing, the easier it is to trade. But I do not make any decisions about what I'm going to do tomorrow until tomorrow morning, because a lot's going to change between now and then. The dollar, the bounce here on the dollar is a factor in the weakness we saw in the market today. That 5-hour move is the second strongest dollar move that we've seen in weeks. So that is notable. It's the bulls negating a daily bear flag. We topped out. We broke the inside bar bearish. We didn't break the low, and then bulls showed up. So if the bulls can break this high of 91.24, it's going to be the first notable shift in momentum on this daily time frame that we've seen in the last month plus, 5 weeks. And what did I say about 5 weeks earlier in this video? Laggard sectors have been going up for 5 weeks. Financial, energy, airliners, Canadian MJ even. Has that been more than 5 weeks? Yeah, a little bit more. So the metal's pulling back. Reminder, bigger picture, we're just looking for a weekly lower high on this gold move. Is this our weekly lower high being set? It's too soon to say. We do still have a little daily higher low at 1822, but that level's being tested here. So again, I'm being very patient, waiting for my metals entry, knowing that this bounce is very likely to just give us a weekly lower high. And silver's the same way. Silver's daily support still holding 2352, but we're just watching for a weekly lower high, anything under 2601. Miners drop down. 35 is a double bottom. So again, the daily higher low is in play. What stood out yesterday? SPY at the highs and GDX closing at its low of the day, unable to break the high of the previous day. Gold broke the high of the previous day. Silver broke the high of the previous day. SPY was at all-time highs. Why were the miners weaker? They keep tilting their hand and giving little clues. The metals are definitely following the miners more so than I've seen. I'd say in the last 2 weeks, the metals are lagging behind the moves that the miners are doing more so than I have seen in a very long time, maybe ever. Maybe I just wasn't paying attention close enough in the past, but definitely noticing it now. Oil had a bearish reaction to the inventory report, but it is still a daily uptrend, anything above 43.92, still holding the daily EMA 12, which has held the last couple periods of consolidation. Resistance is 46.68. Is this a head and shoulders? Nah. We're just going to keep watching the daily higher lows. If oil loses the daily uptrend, odds of the energy sector needing weekly consolidation after going up 5 weeks in a row will increase significantly. Natural gas. Could that be a daily bear flag? Absolutely. Only way the bulls can save this is a 4-hour higher low compared to 228.5 and then a bull break of 240 or 239, nope, 244 to confirm the 4-hour trend change. Have to do that to negate the daily bear flag. Otherwise, it's a daily bear flag, and another leg down would have us looking for daily oversold conditions. So, lots of bounces today. I was playing bounces during live streaming and fortunately went 4 for 4. It was a good morning, but every one was just a little base hit. And I went 4 for 4 and ended up with a day maker, which means the average win was a quarter day maker. I traded NIO twice on a bounce and I traded Tesla twice on a bounce. And I'm not going to go into those exact details because I forget them. Second half of the day certainly took priority. Watching Tesla. So Tesla had an all-out dump. First hourly oversold conditions coming off the all-time high. Back burner trade. So we got that. I ended up scaling in a little bit too early. I made my initial entry around 610. Too early. We ended up dropping another 3.5% from there. But what saved me on that trade, and on this bounce I ended up with, again, another day maker, no home run. But what saved me on the trade was knowing to be patient for a climax flush of 600. We've seen it so many times. I learned that game in crypto where you have a key psychological level, and oftentimes when you're going really extended, either bullish or bearish, into that psychological level, breaking it is the climax to signal the reversal. And with Tesla, I knew to be saving cash. I didn't scale in too early because I kept cash and said, okay, I entered a little bit too early this time, but if 600 breaks, I'm going to add a couple more positions, which I did at 592, 591, and that saved me from entering too early. If I wasn't waiting for that 600 break, I would have entered too early, and I would have been, a break-even trade, and I would not have been in control. Tesla ended with a 5-minute equilibrium. Not a ton of information there, but again, just like everybody else, we're just looking for an hourly lower high. PLTR, first hourly oversold conditions, coming off of all-time highs, just looking for a daily high or low. Nice bounce. 25.33 up to 26. Nice little 5% bounce. Liking the tightening ranges on the daily time frame for PLTR. We were anticipating the daily lower high because that is an equilibrium setup. Nice NIO 4-hour equilibrium. Snow top is hit. We're watching Snow for a daily high or low. Nice volatility there. Penn had a ton of volatility today. News reactions. I was playing DKNG short on that news reaction, looking for a little climax. All in all, lots of trades, lots of little winners, solid day. And today's the kind of day where you can hit home runs. But again, that's not my goal. I just want those consistent wins day after day. Everybody has different goals. There's nothing wrong with trying to go for home runs on days like today. You just want to ensure that you're not trying to go for home runs on any regular day. You need this kind of volatility for that home run to be successful. I hope you had a good day. Use stop losses. The biggest lesson for today for people that lost a lot is stop losses. Have to have them. Things change fast and hard. Have a good rest of your day. Do good things. We will see you maybe tomorrow. I'm going skiing. We'll see.
All right, so here's your mystery. We got this feeder where there's nothing around it to climb up or anything. Fairly clean water. That's mostly rainwater. I clean it out every week or two. There were a couple worms in it last time I cleaned it out. Okay, no big deal. Are these worms coming out of bird poop? That's 1, 2, 3, 4, 5 worms. What looks like would be some poop. There's no other way they're getting up in here. They look like earthworms, but they could be a tapeworm. I am baffled. This dude's huge. He's the big daddy. Planted some bulbs and I don't know what they are, so we'll have to see.